All right, folks, Dave here, and you know the drill. We're talking Oracle, ticker ORCL. This stock has been doing some serious gymnastics lately, and the big question on everyone's mind is, should I buy? Well, today, we're diving deep to find out. So, what's the word on the street for Oracle? It's a tale of two cities, really. On one hand, Oracle's absolutely crushing it with its cloud services, especially Oracle Cloud Infrastructure, or OCI. They're posting robust earnings, beating analyst expectations, and showing some serious muscle in the AI space with strategic partnerships. Everyone's talking about how ORCL is becoming a powerhouse in enterprise AI infrastructure. But, and it's a big but, there's a nagging whisper in the market about their increasing debt burden and whether those huge cloud investments are sustainably translating into free cash flow. So, you've got this awesome growth story running headfirst into some financial skepticism. For those new to the show, Oracle Corporation is a tech giant that basically powers the digital backbone of businesses worldwide. Think of them as the architects behind the scenes, offering everything from enterprise resource planning software, that's your ERP, to supply chain management, human capital management, and crucially, their booming cloud infrastructure. They're the ones behind the Oracle database, Java, and now a major player in cloud-based compute, storage, and networking. They're making big bets on AI, developing infrastructure that companies like OpenAI need to run their demanding models. It's a massive operation, founded back in 1977, now headquartered in Austin, Texas, and still innovating like crazy. Now, let's get into the nitty-gritty, how we reconcile all this market noise with the actual numbers. Oracle's clearly executing well in the cloud, but the market's got its eye on the balance sheet. So we've modeled out three distinct futures for ORCL. First, the steady cloud climb, our base case. This scenario assumes Oracle keeps up its solid cloud execution, with OCI remaining a significant growth engine. They successfully manage that debt we talked about, and their strategic AI investments gradually translate into sustained revenue growth, right in line with analyst expectations of about 21.47% EPS growth over the next 5 years. To get our fair value, we take the current EPS of $4.32, project a one-year EPS of $5.247, and apply a base case PE multiple of 45. That brings us to a fair value of around $236.12. I'm putting a 40% probability on this base case. While the fundamentals are strong, the current technical downtrend suggests that a swift move to this valuation might face some resistance in the immediate term. It's a solid outcome, but not a slam dunk right now. Next up, the AI Supernova, or our bull case. Here, OCI growth absolutely explodes, fueled by unexpectedly high demand for generative AI infrastructure and rapid deployment of new data centers. Those strategic partnerships, especially with players like OpenAI, convert into immediate, substantial revenue streams. Debt management looks fantastic, and free cash flow improves faster than anyone anticipated. In this scenario, we project a one-year EPS of $5.616 from a 30% growth rate and apply a bull case PE multiple of 60. This shoots our fair value up to a whopping $336.96. However, I'm only giving this a 20% probability, and here's why. The technical indicators are flashing caution. The stock is currently stuck in a multi-week downtrend and trading below a key resistance level of $227. A massive rally like this needs a serious catalyst to break those technical headwinds, which just isn't showing up on the chart right now. Finally, the debt drag scenario, our bear case. This is where those market concerns about Oracle's mounting debt and potentially declining free cash flow really hit home, leading to a derating of the stock. Cloud growth, particularly OCI, could slow significantly due to increased competition, capacity constraints, or slower enterprise adoption of AI. Those AI investments prove more costly or less impactful, further straining the balance sheet. In this scenario, we project a one-year EPS of $4.75 from a slowed 10% growth rate and apply a bear case PE multiple of 30. That puts our fair value at $142.56. I'm giving this bear case a 40% probability. And this is where our technicals really underscore the risk. The stock's current multi-week downtrend channel and its struggle to get above that $227 resistance strongly suggest further downside potential if it breaks through key support levels at $200, $180, or $155. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. ORCL is currently stuck in a multi-week downtrend channel. This means it's been consistently heading lower for a while now. We've got some crucial support levels to watch. $200, then $180, and if things get really rough, $155. On the flip side, to even think about resuming an uptrend, Oracle needs to convincingly maintain a price above 227. Right now, it's struggling with that, reinforcing the bearish sentiment we're seeing on the chart. So, after all that analysis, is the bottom in for ORCL? My verdict right now is not yet, but it's a compelling long-term story. The technicals are clearly showing a downtrend, and until ORCL can convincingly break above 227, the path of least resistance is still down. The market skepticism about debt and free cash flow is very real, as reflected in our 40% probability for the bear case. While the long-term cloud and AI growth story is incredibly strong, suggesting our base case of $236.12 is achievable over time, the immediate term looks challenging. It's a classic wait-for-confirmation situation for me. Given our analysis, if you're looking to get into ORCL, I'd be watching those technical support levels very closely. Accumulation could start around the $200 mark, with deeper conviction if it touches 180 or even 155, aligning with our bear case valuation of $142.56. These could be interesting entry points for a long-term play, assuming the fundamental cloud growth story remains intact. Remember, average down carefully. All right, that's it for Oracle today. If you found this breakdown helpful, smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next deep dive. And hey, let me know in the comments below what you think about ORCL. Is the bottom in for you? As always, folks, this is not financial advice. I'm just a guy with a microphone breaking down complex topics for your consideration. Investing involves risk, and you could lose money. Always do your own due diligence, consult with a financial professional, and never invest more than you can afford to lose. Past performance is not indicative of future results.